Calls. So it's every 2 corn calls in a row to every cattle call. So it's 2-to-1 ratio corn to cattle calls right now, and that's what I'm hearing on the phones.
Talking options or actual phone calls?
What to do?
Oh, yeah, I thought call.
No,
options.
these are actual phone calls. It's the ratio is 2-to-1, 2 corn to one live cattle or 1 feeder cattle.
No one's calling about beans.
Nobody's calling. Everybody hates beans.
Welcome to Hedge Heads, where hosts Jon Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, you mentioned it last week, but I'll mention it again now. I enjoyed a week of 80-degree weather in Arizona while you had negative 20s here.
Oh, no, it was 30s. It wasn't even that warm. It was horrible.
All right. Well, it was wonderful. But with that in mind and the news this past weekend, I expect you to have 5 bullet points of what you accomplished last week.
I have many bullet points. Last week was a busy week. We got our studio done. We'll be posting pictures of it, actually, a podcast studio, a legitimate filming and sound studio.
I almost feel like we're the real deal all of a sudden.
We don't have enough sound panels. We only have 4, but we can get more, and then we'll be real, like a recording studio.
Yeah, we'll start charging for time in here.
Yeah, actually, that's a great idea.
I love it. Well, you mentioned that you have had a ton of calls. That's what I missed last week, really, was calls, and more calls. And we're not talking about options. We're talking about actual phone calls.
Yep, and that's the benefit I get to hopefully get on topics that are wanting to be discussed, is that I get to hear from my clients. And the question that I've got a lot of, and we have been talking a lot of about, is corn. And what to do with the new crop corn. Today makes it interesting. I think the front of corn was down 9, and it kind of shook up the back end too. I think it was down 5.5, 6. And it is what we've been talking about. The spreads have been extremely weak up front. We have full carry. As a matter of fact, we have record carry in March, May for this time of year, or it was the other day. And that's been the trouble with the market. It's pushed a little too far. At any time it could get back to reality. And we saw a little of that today. But overwhelmingly, guys want to know what to do with 25 corn. And this is exactly a situation that we should talk about for hedging. Like, this is what hedging's all about right here. You simply make a choice on whether you want to protect yourself, you want to leave it wide open and just take your chance fully in the market with what the weather is going to do, what everything's going to do, or you want to forward contract. Those are the 3 major choices. Now, the popular choice is going to be, well, I would say it's tied. I would say about 40% don't do anything, and then 40% forward contract some. And really, every year is different. So you have to take every situation differently, and they're very scared of the acreage number. That's a number you hear keep getting brought up. They're worried about the very high acres, and they want to know what to do. And then when I ask them what they've done, they've forward contracted some, and I'll never talk a guy out of getting a profitable price. There's nothing wrong with that. The problem I have and have had this whole time is you finally have a market that is able to go substantially higher, and no one seems very interested in allowing the upside wide open. Where the last 2 years, they've held corn very tightly in markets with over 2 billion bushel carryover and expected it to rally for some reason. So I just see guys getting mixed up in these markets. This is a time of year where personally I want to see the weather. I want to see if there's a China deal that they're talking about. I want to see the spring weather. In plantings, can we even get the number that they say in? I don't know why anybody would take the upside out when you have none of the answers that you need, and that's what hedging's all about. So if you hedge, what is something that a guy's looking at? I think you're all the way out to September now. I got 470s. They were at one point 30 cents today, or on Friday they were 30 cents. That's easy math. You got 440 guaranteed, which now probably brings a lot of people below profitability.
You're talking 470 puts.
470
right?
puts for 30 cents, which brings you down to a 440 floor free and clear. Now, a lot of guys are saying, hey, I don't want to spend all that money because that's my profitability. Well, then you don't get to see the weather. You don't get to see anything. You don't get to see that 550 if it comes. You don't get the chance for that. So that's what it is. It's just a choice. Do I want to see what's going to happen, or do I want to do a layup here and just take that good price? And both are right answers. I mean, it could be perfect weather, and this could be the high price. But my point is, a lot of guys just don't even give it a chance, or they don't know when to do it or how to do it. And even if you pay 30 cents for something, doesn't mean you're going to lose 30 cents. There's a million shades of gray. You might only use that option for 1 or 2 months, bleed 6 or 7 cents out of it, yet see a lot of information. So that's what hedging's about.
I was going to say, too, I think it's important to point that out with that 6 or 7 cents bleeding out. Like, you have to spend the 30 cents up front, but you don't have to sit there and watch the 30 cents go away.
And I think that's what guys
think. If the news changes, you can, switch it. You can roll it. You could get out of it. You could just step aside.
Yep.
You don't have to take a 30-cent loss on it.
And why did I use September? Well, 2 reasons. First, for easy math, and then I don't want to go all the way to December. It's too expensive. If you look at the implied volatility, it's much harder to do this year than last year. Last year was easy. The implied volatility was so low. The option prices are so low. Hedging corn's expensive this year. It was really cheap to do this time last year. So 2 very different markets. But again, it's all about the choice. Do I want to see what's going to happen and where the price can go, but yet I have my guarantee? So it's that in-between choice. And like you said, you might only bleed 6 or 7 cents out of it before you're thinking, hey, the summer or the spring weather's not good. I think this is going to go way higher. Let's get out of that put and see what happens. You get to see stuff and you have choices. And that's really what hedging is about. Everybody's wrapped up into getting the top third price. And it's really about recognizing markets that have a lot of potential, and then seeing is there anything that we can do for like cheap insurance. Like last year was really easy. This year I think is difficult. I'm not recommending a guy run out and buy 470s, but you want to start recognizing the choices that you have in these markets, and is it a good idea to do something different than I would normally do?
Well, and I think that's an excellent point that's underrated, and you kind of glossed over it twice now. I think we need to dive into it a little, is that recognizing the market you're in seems to be the hardest part.
Yes.
Guys, it's just trading psychology. I've mentioned it 100 times, but it seems like when the market's really high, the tendency is you believe it's going higher. And when the market's really low or not profitable, you feel like there's no way this thing can go higher. Usually it's the opposite of that.
Yep. This year is a perfect example.
You need to do that. Yeah. And so recognize that in yourself. Yeah. I mean, I have to do it all the time, right? That if you want to effectively hedge, you need to really have a outsider's view of that market and try and step aside and step outside yourself, John.
Yes.
Yeah, step outside yourself and
get a different viewpoint.
Yeah. Ignore your truth and find the truth.
Speak truth to power.
Yeah, exactly. But no, I think that's an extremely important point that you're bringing up, though. It's hard to recognize that market, especially when it's your farm, your crop, and where it's at, and that's your dollars, right? I mean, versus us from a broker point of view where we're just looking at numbers, it's different perspectives, and you got to know what market you're in to be able to hedge effectively.
Yeah. Yeah, and that's really where people struggle. They read too much online. They read too much on Twitter. They read too much on Facebook. They're getting more confused than ever what this market is. And my advice to you is get somebody that has a level head, that knows the numbers really well, knows the seasonals really well. I mean, that's obviously what we do here. And really keep it simple. They say the KISS method, keep it simple, stupid. And that really works well in grains. It's often overcomplicated, and guys are looking for the answer online, and you're just not going to find it. You're going to find a lot of opinion, and it's probably going to confuse you more than ever. What you want to do is look at the numbers, look at the seasonality, look where the funds are, and you want to see what kind of market it is. Is it a market that's in a bad mood? Is it a market that's in a good mood? We have highly inflationary markets. They've been buying on inflation, and the funds really like the grains. So that's the market that I recognize is we're really at a seasonal time where it's 50-50, but the time going into the 1st of May, but the times that it does go up into the 1st of May, they tend to be very strong years. And the times that it doesn't, it's all kinds of different things. It's not necessarily a really weak market. It might be sideways. It might be slightly higher. It might be slightly lower. But the good markets into May tend to be a lot higher. So for me, I love leaving the upside open at this time of year. I have no idea why anybody would take it out. You're going to have most likely a better chance at a better price than this time, this price right here. But we're in a unique year too. This is not an easy year. There's going to be a large amount of corn acreage. If the weather's perfect, it could be a really rough ride until something changes with the weather.
Yeah, absolutely. Yeah. I know you had a couple choices. So you mentioned the put. What else what are the other options?
So what people mainly do is nothing. I mean, that's very common for this time of year for new crop. They might market a little bit. What I'm hearing is a lot of guys are going out and locking in 25. And I've even heard of guys locking in 26. Yeah, it's not historic. I mean, history is not really on your side this time of year, but there is a few years where it has been the right choice. So never say never. It is 50-50 from basically today's date into May 1st. A lot of people, for some reason, think it goes up all the time in the spring, and it doesn't. Sometimes it's falling from higher levels. Everything under the sun, but it's essentially 50-50 in between now and May 1st. Now, what is true is generally something comes up. Planting problems, many years like that, 2009, 2019. Last year, the planting, if we had the same situation for corn and had the same weather as last year, which wasn't bad, but it wasn't good. I think they intended 92.5 million, got 90.5 million acres. So let's say we're at 94, we get 92 in. We're probably going to see 550 at some point during the summer if there's a weather issue. And that's what I'm talking about. It wouldn't take much to get us to go a lot higher than where we are right now. But it also might rain just perfectly. The planting might be extra early, might be 97 million acres, and this is going to look like an awfully good price. So hedging's about realizing you don't know what the answer is and just trying to use the best tools to get you a chance at a higher price without basically burning too much money.
Yeah. You had mentioned about a month ago now that you were keeping an eye on a butterfly spread. Is that gone now, or is that something that's still a possibility out there?
No, it's setting up perfect. And as a matter of fact, I had started putting on one of the wings on. So you're basically, for a butterfly, you're going to be long one contract. The body's going to be two short contracts. And then the other wing would be long another corn contract. So I won't give you a specific combination of what I'm doing, but basically it has to do with old crop being the short side, or new crop, and then the old crop being the bull spread side. So if you want specific details, definitely give me a call. That's something that is set up very well. I think is going to work very well this year, and I am doing right now. So unfortunately I can't give the actual recommendation, but if you call me or email me, I'd be more than happy to go over it with you.
So from that spread side, we're talking spreads in the butterfly sense here, but you mentioned earlier too, I also saw a tweet from you on it too, but like the March-May spread versus the May-July spread, there's 10 cents difference there. What's going on? So what I don't like is where May-July is. I don't like where March-May is. It's saying there's too much corn in the pipeline. That's why I like spreads. That's why I look at spreads all the time. It's really your only defense at the only look at to what the commercials need. You're going to hear in the news what they want you to hear, but the actual what they need and what they're saying is they have plenty to get it through March. That's what the market's saying. Please don't bring it in. If you wait, you get 15 more cents for May. What have we seen in the past with these numbers? May heavily inverted over July, and right now it doesn't look like that's even possible. Because March-May is going off the board so poorly. But we have a few more days left. It might change. Still, there's too much in the pipeline. Now, the big debate is it all sold and now we're not going to have any for the rest of the summer or very little? And that's where the bulls are saying, hey, we've sold more than ever, earlier than ever. So look out. We're going to get ultra tight this spring and the summer. And then the bears are saying maybe the numbers are wrong. Maybe there's way more corn around than we thought. The spreads are definitely saying that. But in a normal year, you would already see May inverted over July.
And May tends to be the highest price that you can get, and then the best price you can get. You go back a few years ago, I think it was 60 cents over July. Russian-Ukrainian war, it was 45 cents over. 2 years ago, it was 35 cents over just naturally. So May tends to be the highest price contract, and that's about knowing what spreads to be in when and what contracts to be in when at the elevator. It's not all done here. Like having the knowledge to know when to have basis contracts, when to roll basis, when to roll your contracts, very important. It all has to do with spreads. So that's why I keep on bringing up spreads. You get to know the spreads, you'll get to a better feeling of the market. I had a real uneasy feeling for a long time with how much bear spreading they're doing in soybeans and corn. And today it kind of finally showed up. I mean, not so much for beans as corn, but it was kind of an ugly day for grains and reality set back in. But ultimately, it's healthy for the market as well.
Yeah, well, you know that's because my puts expired on Friday, so.
Yeah, I had a whole bunch of March puts on, or people did last year, and then we kind of just didn't think it was going to fall, and we ended up taking a lot of it off. And last year, going into deliveries the day before, I think we made the corn low for quite some time. So March was a low last year, and then it worked its way up a lot higher after that. But it's the opposite this year. It's probably a high so far.
Yeah, we'll have to see what happens. I mean, I know there's plenty. Well, we've been bullish corn quite a bit, and now I wouldn't say we're not bullish corn. I wouldn't say we're bearish corn, but
we'd have to go back and look. I'm interested. We can see all our podcasts, but I think we started talking when you accused me of being bullish corn. I think that was late October, maybe early November.
That was the first time I have ever heard you bullish corn.
Yeah, you pointed a finger and accused me that I was bullish corn, and I had to defend that I wasn't exactly bullish, but then I was sort of, so I couldn't have been wrong. I didn't want to be wrong when we look back. So right. I believe it was November or late October when we first, you could tell it was changing very rapidly. But what I don't like is with this record export demand up to this point, like why is there no tightness anywhere in the U.S.? This is kind of mysterious.
Right. Well, yeah, it is weird, especially when you do look at those spreads and say, yeah, what's going on?
Yeah, this year doesn't match any year that we've seen with the numbers the USDA has put out. As a matter of fact, we're running ahead of the numbers with exports. We're probably closer to 1.3 than 1.5, and the market acts like we have 2 billion. I mean, I'm not sure what's going on with the numbers. Again, the bulls say it's coming, don't worry. And the bears say it's not going to matter pretty soon because the runway is getting awfully short for this to get really tight. And then the world ending stocks are really tight in Brazil. And if you take China out of the equation, that's been all the rage put on Twitter. That's how tight these ending stocks are.
I did read Twitter when I was on vacation. It did seem like there was some sort of campaign, maybe with a certain list of influencers that were published on a certain...
I knew it was trouble. I saw one day at least 6 people note how tight it was in the world of ending stocks. I'm like, this is exactly the kind of story...
with the same like wording.
That. Yeah, it's like it's like, oh, look out below, because it's, if you read it, and just took it at face value, you'd be like, I got to get long corn immediately. What am I waiting for? Twitter says this, and then of course it went the exact opposite direction. So I hate to be that guy that says that there's conspiracy theories, but I have a feeling that this information was released for a reason. If you take China out of a lot of numbers, you can make things look really bullish really quick. A lot of cherry picking, and we've had past episodes on the cherry picking. You can make anything look bullish or bearish if you throw enough numbers, or like I say, take countries out, or you just make the pie chart look scary. I mean, you can make anything look bullish.
That's why I like drawing lines on charts, because then I know my positions are good.
If you draw enough lines, you'll know exactly where it's going, of course.
Exactly. Speaking of lines on charts, we like to use those for metals, don't we? I mean...
Yeah, I have a line. Some people call it the magic purple line. No, actually, that's a different guy I used to know had the magic purple line. But there's a line in platinum that I do like. That's a market that we're going to talk about different markets, maybe an episode, and platinum's this episode. That's my favorite metal. Metals are the hot trade. Why chase the one that's expensive, gold? I mean, why not get the one on sale is what I say. I like platinum. Platinum often would lead gold in price for many, many years. And over the last decade, platinum's got to be what? not even half the price of gold. It was
Right.
Yeah, it's I think I just looked at it right before I took off. I believe it was somewhere in the 975 range, and gold's up there towards $3,000. Platinum's only a 50-ounce contract because it was a higher price contract than gold, and they didn't want too big a contract. Now it looks like a small contract, but that's another reason why I like platinum. A 50-ounce contract, perfect. Gold's 100. Well, I mean, there's also 33 ounces. I believe a 10-ounce contract now, but platinum's a nice size contract, 50 ounces. I enjoy it. There's a number on the chart, and you can go look, that it seems to not stay at very long and come up out of every time. So it's also a very simple market. I like, or simple. It's been simple in the past. The one big spike down was when they shut everything down for COVID. I think that day I was in Florida for sure, and I remember looking at the computer, 673 for a low that day.
Ooh.
And I think even by the close it was 725. I mean, it went way down and then didn't stay in the 700s very long either. And then it was right back in the 900s. Go look at the chart. I mean, it's something where, I give charts a hard time, but the support level on that is pretty apparent where it likes to bottom. And I have a number of guys that follow. Platinum's one of my favorite metal markets, if not it is my favorite metal market for sure. And it's just not a market you hear talked about often. Very tied to the economy, very tied to the world economies, very tied to automobile manufacturing in catalytic converters. So it's got obviously used in industry, and then it's also seen as a precious metal. Metals are very seasonal. There's a seasonal for platinum too, and I believe it's down, and I'm not sure the dates. But not too long ago, before Christmas, there's a very strong seasonal up. So I like metals. They're very seasonal. They're often chaotic throughout the day. So, if you like a market that moves a lot, that's going to be the markets that you like are metals. But it's not for, it's for deep pockets. It's not for learning about the markets. Metals are fairly unforgiving, and there's no limits.
The unforgiving part should be stressed.
Extremely unforgiving.
Yeah, but there are opportunities. Here's a live quote, which we don't normally do on the show, because who knows when you're listening, but 968 was what platinum closed at today.
Yeah, and it's probably not going to be there for very long. That's platinum. And I think it's $3,300 margin if I looked at the sheet right. It's a higher margin deal, but still, there's a reason why metals carry a bigger margin. But still, 975 in a sea of more expensive metals, it definitely is on my radar screen, and I'll leave it at that. I am following it every day. I do like the price.
Nice.
Not this exact price, but
no,
how low it is.
This is where you start analyzing a market.
Yeah,
and watching your purple line.
You can see my Twitter tagline: "No spread is too deferred." I've been following a hog spread since I think last August, and if all things go right, I may be putting it on in about 3 weeks from now. But I've been following it every day since then. I mean, not every minute of the day.
And it's probably not a 25 spread, I'm guessing.
It is.
Or one
it is.
leg. Oh.
At the time when I was looking at it, we're in middle of 24, and I was looking at the deferred 25 stuff in the hogs, which I don't think a lot of people do, but I was. And it is a spread I've been tracking for a long time. I think I've been in it every year. Last 2 years have been scratch to slight gains, but I like it. I like to track stuff for a long time. Sometimes it just falls into your lap. That day, there wasn't an opportunity. The next day, there was. Oftentimes, I'm tracking stuff for quite a while.
Speaking of the meats, feeders had a great day.
Yep.
I mean, really nice day.
You're going to need live cattle to come because what did we come up 90 cents to $1? It felt great in feeders. As a matter of fact, I got a lot of phone calls to make for feeder guys. I have a number of guys that were looking at hedges. We have to figure out what we're going to do. I think we talked in the last episode that everything's very expensive. So hopefully we can come up with a good idea. It was nice to see it was up $5 today, I think. Live cattle did not follow. And that's ultimately the boss. Because if you can't get paid on the finish side, you can't continually pay indefinitely on the not finished side. The smaller, lighter calf, like you can pay anything you want, but you're not going to come out on the other end if the live cattle don't go up. So we're going to need to see that moving. And it was nice to see that, though, finally today, a nice day up. And we'll see if we can build on it, but we're going to need to see live cattle come with us, or it's not going to last very long.
It is interesting because live cattle is still well under cash, but so what's your feeling that way?
Actually, while you were on vacation, Ryan, cash caught up to live cattle. It is
really?
right in line. It's $1.99 trade. Yes, okay. That's good for you. I like how disconnected you were.
Yeah. Sorry, I was on vacation.
Nothing but
I did not follow cash.
No, it was $1.99 trade in Texas, and that was the beginning of the end for the futures here. So the good news is the futures aren't underpriced and they're not overpriced. Now it's all cattle fundamentals. Seasonals aren't great, but the fundamentals are good. So that's what the cattle guys are cheering for. That this year is different. The seasonals are going to be overridden by the lack of cattle. Feeder cattle were fired up today. Now we just need to see a little more enthusiasm in the cash trade and the live cattle, and then we can sustain a rally. That being said, I definitely am having a lot of conversations about hedging. You want more information on that, you will have to call, because it's complicated this year. It's not an easy hedge, and you want to look at all your options that you have. Literally, just anything that you're not going to lose your shirt on these cattle. You have to at least entertain some sort of hedge up here. A lot of risk. Hopefully a lot of reward. I have a few guys selling in North Dakota today. I'm going to call them later this afternoon. I know they're excited. It was too cold to sell last week, so it might have actually turned up for them with a $5 day up. As long as everybody in the sale barn saw that, there hopefully is a great bid for them today. So it's calving season, it's cattle selling season, and there's lots to talk about on the hedge side there too.
Yeah, well, knowing that news, that leads a lot of opportunity for hedging. It's just, man, there's tough decisions too, right?
Yeah,
I mean, think back to going back. We talked in October. There was zero opportunity to hedge cattle back in October, and that's dangerous.
If you went with the seasonal last year, you probably did pretty good, which is basically we just had it right at the beginning of February, to like maybe the 5th or 6th. It came in about a week and a half early. Last year, that would have been a good zone as well, but then it fell apart completely going into the summer, which is unusual, especially for feeders. Everything got way underpriced, and then everything got way overpriced. So you've seen a lot of different looks, and I think it's going to remain a very volatile trade. I don't think that's going to change. I really don't like how easy it was for corn last year, beans, and cattle this time last year, and how hard it is this year compared to that. There's the margins are just gone. I mean, cattle a little bit better than corn and beans. The options got really expensive for hedging, and the margins have gotten a lot worse for profits. So it's not easy. This year is much more difficult year, but you just take it day by day. Things do change, and so far doing nothing's been the right answer except for cattle. But only recently. But really sitting on your hands has been the right answer. Now the hard part comes making decisions in corn, making decisions in feeder cattle and live cattle. Soybeans, which we haven't talked about at all because no one wants to talk about soybeans.
No one wants to talk about.
No, they're sold out, mostly sold out, I should say, and no one really wants to plant it. The ratio says so, and it's just not a market that people want to talk about. And if they do, they want to short it, which actually hasn't been right. So beans have been tough. I don't think that's going to change anytime soon. But the weather really is, I would say, you can't say it's on the finish line in Brazil. They're probably going to be 40% harvested by the end of this week. And there's going to be a lot of beans for sale in the world. And really, there isn't a story, at least short term, for soybeans that I see.
Yeah, well, the one story for beans is they have 9 lives, and I think they've used 3 of them, so there's still plenty of room for them to do whatever they want to do.
They're fighting unbelievably good, and they're still losing terribly bad to corn. And you look at the ratio, it's as low as it's been ever for this time of year. So as hard as they're battling, they're still not winning anything. I can't wait till the March report comes out. That's where we're going to really get a good look at what we have. But they're saying even, let's just say beans are off 5-6% off last year planting wise. There's still not that good of numbers, and that's really why nobody wants to talk about beans. There's not a really good pathway to really good solid fundamentals, but beans, like you say, they have 9 lives, and things change really quick there. We could have this mega China deal that they're talking about, the trade 2.0. It's got many names on Twitter anyways. We'll see if that is actually real, but they say the back channel talks are going great. Talks are, I think Trump even mentioned something today about how well the talks are going. And of course, every word he says, you got to take exactly at face value. That's the way he works.
Right.
Anyway, it sounds like the talks are going good. Are there even talks happening? Who knows? I mean, honestly. But if you were to believe what's in the news, the talks are going great. So that could have a huge impact on soybeans.
Here, I had no idea that's the way you were going to go. Excuse me. I thought you were going to say like bean acres were switching to wheat or...
No. Cotton. I do cotton. Cotton's been a hot topic.
Ooh, cotton.
The cotton guys don't like what they've seen. Cotton's basically fell apart. It's even worse than soybeans. So they're thinking some cotton acres are going to go to corn, or at least that's the hot Twitter story of last week. But I believe it. Cotton's not cheap to plant, and the price went straight down. So it does make a little sense.
Very interesting.
Yeah.
What are the yields on those fields versus... I mean, does that really change things?
Seeing how we're in northern Minnesota and cotton's growing about as far away as possible from here.
You have no idea. Is that what you're saying?
I can figure it out. No, I don't know what a good yield would be, but I have guys I could call and we could figure it out. No, cotton really, it used to be a market that would be traded off, and I would trade it. I like spreads there. And then ICE came and took cotton and made quotes $150 a month for everybody, and nobody trades cotton anymore except for the cotton guys. I should say people, but it's not near as popular as it once was. And that has everything to do with the data. If they would just have the regular quote data, I think that you'd have much better sugar, coffee, cotton. But no, it falls under the ICE, so it's 30 minutes delayed for most everybody, and it just I don't know what happens. Markets sometimes lose their popularity. Cotton feels like that market because you definitely used to have guys in cotton. I think you had a guy last year, but I used to have at any time maybe 10 guys in cotton, and now it's very, very quiet. So I don't know. I don't know what a good yield is, but I know that nobody plants cotton here.
Sounds good. I going back to the cotton side, talk about unforgiving markets, though, especially when your quotes are delayed 30 minutes.
Yeah, sometimes it's probably better that it's delayed.
It might be.
What's off the bad news?
Oh, yeah, that or good luck trying to get out when you're going back to last week's or 2 weeks ago, limit orders. There's the only way you're moving in that thing, and you better be prepared to move them all over the place to get filled.
You just reminded me of a story, and I mean, it takes some doing to knock the cobwebs off this story. But I remember now, like when I first started trading, I would call my broker in Bismarck there, and it goes way back. My uncle was a commodity broker, one of the first brokers in North Dakota or Bismarck at least. So, and then one of his clients eventually turned into a broker. Anyway, that was my broker that I would call, and I like the 10-minute delays. I can't tell you how many times when I first started trading, I would have a position on, and you gotta understand, this is like when oil was $11. Sugar was who knows what price. I meant I don't know. This is like 1997, 98, 96 even through 2001. Go look at the prices for commodities. I meant
it was brutal.
Yeah, 13 was a high price for oil. You can imagine what the rest of them were. But what would happen is I'd be along, let's say, sugar, and then I would look at the market and I'd be like, oh, I'm in trouble. If sugar's going down, I'm long. By the time I called him, he'd be like, well, no, what are you talking about? It's back up on the day. It actually saved me a lot of money being 10-minute delayed because it really took the emotion out of the trade, those short-term fluctuations, which was probably 3 pennies at the time. That probably was a large move. Yeah. And so by the time I called him, the little sell-off would be over and it would be back up, and I would stay in because it was 10-minute delayed. So I honestly think that probably helps people more than it hurts them, except for fast markets. I mean, it can be, we just don't have those right now. But I prefer the 10-minute delay. It takes the panic out of your trading decisions, because by the time you call or text or whatever, do it yourself, the market may have it might have just been a little blip, and it often is, that in commodities. You look at a chart, or you look at a 10-minute chart, maybe beans, you're trading your option, and you concentrate too much on the short-term time frames, and it really throws your trading off. Of course it can help, but I'm just saying, oftentimes guys don't need to watch it that close, I guess is the point I was trying to make.
Well, and that would go along with knowing your market also, and knowing your trade.
Yes.
If you're making a swing trade, a longer term trade, a hedge for a reason.
Yeah, 10 minutes doesn't matter at all.
Exactly.
No, and if it does, you can call your broker or me, and then we'll give you a quote. I mean, I don't know that it's free anywhere online. Everything used to be free quote-wise. I know the exchange charges it. There might be some firms that eat that cost, but it isn't free for anybody. Probably volume-based stuff. But yeah, back in the good old days before corporations took over, they thought, hey, if we got more data out to people, more people will participate. And then the corporate boards came in. It was member owned in the CBOT and CME, and they actually cared about the product. Now they just want to make money, so they charge for quotes, and that's why most people are delayed, or that. And when you see it online, of course we got to pay to get real time quotes. But back not too long ago, everything was free.
Yeah, I miss those days.
I do. I miss those days. Yeah. And I really love the pit and electronic and the free quotes. That had to be the heyday for everybody, because pits were super active. Electronic was good, so you could choose one or the other. I remember if you had a large spread order or a large order, you're better off going in the pits. It was more liquid, even with electronic markets running side by side. And then, eventually, slowly but surely, electronic markets taking over everything. And now we have Fartcoin. That's how that happened.
I
haven't brought that up for a long time. No, I'm ashamed every time I do, too.
It's funny that you did bring it up, because I did see last week somebody was going to put their money in Fartcoin. So
yeah, I mean, times have really changed. Everybody, all my buddies, they're on their phone making sports bets, and they're jumping around in crypto. This is not going to end well. We got a nation full of gamblers now. Everyone seems to be betting on their phone. This is not a world I know very well, other than the commodities, but still, it seems very common nowadays. Everybody's in something hot.
Well, you're on record for saying it won't end well, so someday you may be right.
It will be someday, and I sound like an old person now.
John,
you'll see, Sonny. No, but I don't know how it can end well. I mean, when you are making stuff up and then people are buying it and driving it up. I collected baseball cards in the steroid era. They're all worth nothing now. Like Jose Canseco, Greg Jeffries. I mean, all these hot ones. They were just they just went straight up. Ken Griffey Jr. And now they're all worth $3. That's what's going to happen to cryptocurrencies.
I got a stack of Roger Clemens rookie cards. You know how much those are worth now?
I was going to retire my Else Burke stack of rookie cards until I lost it at the at the card store playing cards with those guys. And I learned a lot about life. They were 30, I was probably 14, and you had to pay your debts if you lost the cards there.
Yeah.
Yeah, no, those are the good days. We used to open packs and go packs for packs. So we'd have the Beckett guide there. We'd open the pack in a seedy little basement in downtown Fergus Falls, and you pick your best 3 players without looking at the Beckett. And it would always change every month. So you kind of had to know your values. You put your best 3 players against their best 3 players for that pack. And so we would do that. We basically gambled every day. So I guess back to what I was just saying, I guess it is pretty normal. We just didn't used to do it on our phones.
Yeah, you just didn't see everyone else doing it.
No, I guess I've always been in those markets too.
We're a nation of gamblers.
Yeah, that's exactly what it is.
All right. Well, anything else for this week, John?
No, we have our studio done. We have our subscription. So if you want a lot more of us, that's behind the paywall. And you can go to our website. So this is all brand new freshly approved from compliance. And check out the new webpage. And then we'll put some pictures up of the new studio as well.
Excellent. That's thehedgeheads.com. Thehedgeheads.com. Or follow us on Twitter at Hedgeheads.
Or Facebook.
Yeah. How do people call you?
218-731-1578.
Thanks, John.
Yep.
Let's make a bet on the March planting number. This is recorded, and it will be the outro of the show. So, March planting intentions number you're going with?
95.2, and I just completely made it up, but that's what everybody else does.
Okay. I am going to go with 97.4.
Wow, that's a high one.
Yeah,